The world of finance witnessed a historic moment on April 14, 2025, as the first-ever XRP Exchange-Traded Fund, or ETF, debuted on the New York Stock Exchange. This landmark event marks a significant step forward for XRP, a digital asset that has garnered both attention and controversy in recent years. The launch of the Teucrium 2x long daily XRP ETF, trading under the ticker symbol XXRP, signals growing mainstream acceptance and interest in XRP as an investable asset. This ETF launch is particularly noteworthy as it precedes the approval of a spot XRP ETF, a development many analysts had anticipated occurring first. The arrival of XXRP on the NYSE, even with its leveraged nature, is a testament to the increasing maturity and sophistication of the cryptocurrency market. It provides investors with a regulated and accessible avenue to gain exposure to XRP's price movements. The launch has already generated considerable excitement within the crypto community and beyond, with XRP experiencing a surge in price following the announcement. As investors and market participants digest this development, it's essential to understand what XRP is, the implications of this ETF launch, and the factors shaping the cryptocurrency landscape in 2025. This ETF launch is not just about XRP, it's about the evolving relationship between traditional finance and the emerging world of digital assets. XRP, often mistakenly referred to as Ripple, is a digital asset specifically designed to facilitate fast and cost-effective cross-border payments. Developed by Ripple Labs, XRP operates on a decentralized ledger called the XRP Ledger, which boasts faster transaction speeds and lower fees compared to traditional payment systems. Unlike cryptocurrencies like Bitcoin, which primarily function as stores of value, XRP is intended to be used as a bridge currency. This means it can facilitate the exchange of different fiat currencies, such as US dollars or euros, more efficiently than traditional methods. XRP's unique features and potential applications have attracted attention from financial institutions and payment providers seeking to improve their cross-border transaction capabilities. Ripple Labs has partnered with numerous banks and financial institutions worldwide, exploring the use of XRP in real-world payment solutions. However, XRP has also faced its share of challenges, including regulatory scrutiny and legal battles. Despite these hurdles, the launch of the first XRP ETF signifies growing confidence in XRP's future prospects and its potential role in the evolving global financial system. Teucrium Investment Advisors, a well-established firm specializing in agricultural commodity ETFs, has made a bold move by launching the first XRP ETF. This strategic decision marks Teucrium's entry into the cryptocurrency space, demonstrating their recognition of the growing importance of digital assets in the investment landscape. The Teucrium 2x long daily XRP ETF, trading under the ticker symbol XXRP, is a leveraged ETF. This means it aims to deliver twice the daily price return of XRP. For instance, if XRP rises by 5% in a day, XXRP seeks to provide investors with a 10% return. Conversely, if XRP falls by 5%, XXRP would experience a 10% decline. This leveraged nature makes XXRP an attractive option for short-term, high-conviction XRP investors. It allows them to amplify their potential gains if their bullish outlook on XRP proves accurate. However, it's crucial to understand that leverage is a double-edged sword. While it can magnify profits, it can also exacerbate losses, especially in volatile markets. Investing in leveraged ETFs, particularly in the volatile world of cryptocurrencies, requires a cautious approach and a thorough understanding of the associated risks. Leveraged ETFs are designed for short-term trading, typically holding positions for a single day or less. The 2x leverage employed by XXRP can result in significant gains or losses in a short period. While this can be appealing to experienced traders seeking to profit from short-term price fluctuations, it can be detrimental to long-term investors or those unfamiliar with the intricacies of leveraged products. Moreover, the cryptocurrency market is known for its volatility, with prices often experiencing dramatic swings in short periods. This inherent volatility, coupled with the leveraged nature of XXRP, can lead to substantial losses, even if the investor's overall market view proves correct over a longer time frame. Before investing in XXRP or any leveraged ETF, it's crucial to conduct thorough research, understand your risk tolerance, and consider seeking advice from a qualified financial advisor. Section 5. Macroeconomic tides liquidity injections in crypto assets. So, the launch of the first XRP ETF is happening, well, during a time of some pretty significant macroeconomic developments. The United States reached its debt ceiling of $36 trillion in early January 2025. In response, the U.S. Treasury has injected $500 billion into financial markets since February 2025, drawing funds from its Treasury General Account, or TGA. This massive injection of liquidity has, pushed net Federal Reserve liquidity up to $6.3 trillion, which could potentially influence a variety of asset classes, including cryptocurrencies. Now, while the immediate impact on Bitcoin and other crypto assets has been, let's say, minimal, some analysts are suggesting that this influx of liquidity might support risk assets like cryptocurrencies over the long term. That said, the macroeconomic landscape is still pretty uncertain. Factors like inflation, interest rates, and global economic growth continue to shape market sentiment. For investors in the XRP ETF, or really any investment, it's crucial to stay vigilant and, be ready to adapt to this ever-changing macroeconomic environment. Section 6. The regulatory landscape spot XRP ETFs on the horizon. The launch of the Ethereum 2x long daily XRP ETF comes at a pivotal time for the cryptocurrency industry, as regulators worldwide grapple with how to oversee this rapidly evolving asset class. While XRP has obtained approval, the U.S. Securities and Exchange Commission, or SEC, is still reviewing several applications for spot XRP ETFs from various firms, including WisdomTree, Bitwise, 21 Shares, Canary Capital, Franklin Templeton, and Grayscale. These spot ETFs, unlike leveraged ETFs, would track the actual price of XRP directly, providing investors with a more straightforward way to gain exposure to the asset. The SEC's decision on these applications is expected in the coming months and is being closely watched by market participants. The regulatory landscape for cryptocurrencies remains fluid, with ongoing discussions and potential changes on the horizon. The approval of spot XRP ETFs would represent a significant milestone for the industry, signaling further mainstream acceptance and potentially paving the way for similar products in the future. Section 7. The Mantra Crash. A reminder of market volatility. Just a day before the historic XRP ETF launch, the cryptocurrency market experienced a stark reminder of its inherent volatility with the Mantra Crash. The OM token, associated with the Mantra DAO platform, plunged by a staggering 90% in just 2 hours, wiping out over $4.5 billion in value. While the Mantra team denied any involvement in the crash, attributing it to reckless liquidations, the event sent shockwaves through the crypto community, highlighting the risks associated with investing in this nascent and often unpredictable asset class. The Mantra crash serves as a timely reminder that while the launch of the XRP ETF is a positive development, the cryptocurrency market remains susceptible to sudden and significant price swings. Investors, both seasoned and new, must exercise caution, diversify their portfolios, and be prepared for potential volatility. Section 8. Opportunities and Risks. Investing in the XRP ETF. The launch of the first XRP ETF presents both opportunities and risks for investors. On the one hand, XRP offers a regulated and accessible way to gain leveraged exposure to XRP's price movements. For traders and investors with a bullish short-term outlook on XRP, this ETF could provide a means to amplify potential returns. However, it's crucial to acknowledge the risks associated with leveraged ETFs, particularly in a volatile market like cryptocurrencies. The 2x leverage employed by XRP can magnify both gains and losses, potentially leading to substantial losses if the market moves against the investor's position. Furthermore, the regulatory landscape for cryptocurrencies remains in flux, and future developments could impact the XRP ETF's performance. Investors should carefully weigh the potential rewards against the inherent risks before investing in XRP or any other cryptocurrency-related product. Section 9. Conclusion: A new chapter for XRP and crypto adoption. The launch of the first XRP ETF on the NYSE is a watershed moment for both XRP and the broader cryptocurrency market. It signifies growing mainstream acceptance, increasing institutional interest, and the maturation of digital assets as an investable asset class. While challenges and uncertainties remain, including regulatory scrutiny and market volatility, This development marks a significant step forward in the evolution of the global financial system. As investors navigate this evolving landscape, it's essential to approach cryptocurrency investments with a balanced perspective, recognizing both the potential opportunities and inherent risks. The journey of XRP and other cryptocurrencies is far from over, and the launch of the first XRP ETF is just the beginning of a new chapter in the ongoing story of digital asset adoption.